The highly anticipated jobs report is out Friday. It will likely be a big market mover, but it's not just the headline number that matters. Joining me now is Nicholas Colas, the chief market strategist at Convergence, a global brokerage company. Hi, Nick.
Hi.
So investors are grasping right now for any clues they can get ahead of the big jobs report. And this morning they were greeted with a mixed bag of data. Weekly jobless claims came in stronger than estimates, but productivity fell in the last quarter rather than rising slightly. And another report showed the number of layoffs in this country rose to a near 2-year high last month. What's going on here, and what's your assessment to this mixed bag of data?
You're absolutely right. It is a mixed bag. We can't draw one simple message from the data. That productivity number definitely disappointing, but the claims number a little better. So overall, I think it's very much a template for what we see the market doing today, which is, yes, we're trading a little bit higher, but at the same time, there's not a lot of confidence the economy is really moving higher at a faster speed.
And when it comes to wages, you found cyber stalking Uncle Sam, but in a legal way, gives you a good assessment on how Americans are really feeling about their personal economies. Can you share with me a little bit more about where you're getting this info and what you're finding?
Absolutely. There's a document online through Treasury called the Daily Treasury Statement, and it shows you basically Uncle Sam's checkbook, including how much he's getting in tax receipts every day. And this is the money we all pay out of our paychecks and comes directly to Uncle Sam. So you can track in real time how much the nation's workers are producing and earning. And what we found was that the withholdings and taxes that Uncle Sam is getting are actually declining in terms of percentage growth. They were 8% in Q1 of last year, 6% in Q4, but only 2.5% in January. And that's the number that's going to get reported tomorrow. So we're pretty cautious on wage growth. Even if the jobs number is good, that wage growth number, which has been declining in terms of percentage growth, we're pretty worried about.
Right, and bringing all this together with wages and job growth, the unemployment rate has dropped significantly, and that would suggest a strengthening labor market. But as you mentioned with wages, so is the U.S. economy creating strong enough jobs to sustain the middle class in this country?
Yeah, it's been very tough so far. You know, the bottom line here is the numbers have kind of been there, 250,000 jobs added, good number. But look at the jobs we're losing in the oil patch, for example. Those are really good paying jobs, roughly double the national average. And we're losing some of those right now. We've got to make them up with some better jobs somewhere else. And that'll be the challenge in tomorrow's data. Where are those jobs?
Fantastic. Thanks so much for sharing your insight with us today, Nick.
Thank you.
Nicholas Colas is the Chief Market Strategist at Convergence, and I'm Susanna Lee for The Street.